I'm feeling high.
Subscribe, like, comment, and share this video around the Forex community to help others achieve their dream.
Welcome to Rally Forex Solution channel. On this channel, we'll give you tips on how to make money online. We'll show you practical proof and train you, especially in Forex trading. Okay, how to become a successful Forex trader, and we'll give you tips on how to succeed in the Forex market daily. Without wasting time, we'll be looking at the topic, all right, titled "How to Chart the Markets." How to chart the market. I understand that most new traders don't know much about charting of the market. They only depend on the resistance and support zone, all right, to trade, which is not supposed to be so. Okay, all right. As a Forex trader, you should be able to know how to chart the market properly in order for you to have a successful trade, okay, running for you. Before any trade is initiated, it's always advisable you have studied the market properly. Always important to have a good trading plan so that you can know where to start trading and where to stop trading. All right, charting the market is the most important, because when you talk about charting the market, all right, you're talking about all of those things. All right, knowing your support and resistance zone, risk management, and other things.
Why is it good for you to chart the market first before taking any trade in the Forex market? Charting the market before taking any trade in the Forex market is a fundamental aspect of technical analysis, and it provides several benefits for traders. Price patterns and trends. Charts help traders identify price patterns and trends in currency pairs. This information can be crucial in making informed trading decisions. By analyzing historical price data, traders can spot trends and potential reversal points, which can help them enter trades at favorable moments. Support and resistance levels. Charts help traders identify key support and resistance levels. These levels represent areas where the price has historically reversed or stalled. Traders can use this information to set entry and exit points, as well as stop loss and take profit levels. Timing entries and exits. Charts enable traders to time their entries and exits more effectively. By analyzing charts, traders can wait for confirmation signals, such as breakouts, trend reversals, or specific candlestick patterns, before entering or exiting a trade. This can help reduce the risk of entering trades prematurely. Risk management. Effective chart analysis can aid in risk management. Traders can use charts to determine appropriate position sizes based on their risk tolerance and the distance to their stop loss levels. This helps in managing risk and preserving capital. Psychological comfort. Chart analysis can provide psychological comfort to traders. When traders have a clear understanding of market conditions and the rationale behind their trades, they are more likely to stick to their trading plans and avoid impulsive decisions driven by emotions like fear and greed. Historical performance evaluation. Charts allow traders to evaluate the historical performance of their trading strategies. By reviewing past trades and their outcomes on charts, traders can refine their strategies and learn from their successes and failures. Multiple time frame analysis. Traders often use multiple time frames on charts to gain a broader perspective of the market. For example, they may analyze a daily chart for trend direction and a shorter time frame like an hourly chart for entry timing. This multi-time frame analysis can lead to more well-rounded trading decisions. Market sentiment. Charts can also provide insights into market sentiment. Patterns and price movements can reflect how traders as a whole are reacting to economic news, geopolitical events, or other factors that influence currency prices. In summary, charting the market is a critical step for Forex traders as it helps them make more informed and strategic trading decisions. By using charts, traders can identify trends, key levels, and entry-exit points, manage risk, and make decisions based on data rather than emotions. It's an essential tool in a trader's toolbox to increase the likelihood of success in the Forex market.
I'm feeling high.
Subscribe, like, comment, and share this video around the Forex community to help others achieve their dream.